There's this thing that happens to people who start getting interested in personal finance. They read some books, listen to podcasts, follow some Instagram accounts about money, and suddenly they feel like they're really doing something. They're learning about investing, researching high yield savings accounts, optimizing their credit card rewards, tracking every expense down to the penny. They're busy with their finances. They're engaged. They feel productive. And then 5 years go by, and they look at their net worth and realize it's barely moved. They've been busy, sure, but they haven't actually built any wealth. They've confused activity with progress, motion with movement. They've been rearranging deck chairs on the Titanic while calling it financial planning. My name is Drew, and one of the most frustrating things I see is people who are genuinely trying to improve their financial situation, but are focused on all the wrong things. They're spending hours on tasks that make them feel productive, but don't actually move them closer to wealth. If you're doing a lot of stuff related to money, but your net worth isn't growing the way you think it should, make sure to subscribe and hit that like button, because I'm about to show you the difference between building wealth and just looking like you're building wealth. Let's start with the most common fake progress activity: obsessively tracking expenses. Now, I'm not saying you shouldn't know where your money goes. You absolutely should have some awareness of your spending patterns. But there's a huge difference between tracking your expenses to identify problems and fix them versus tracking your expenses as an end in itself. I've met people who spend hours every week categorizing every purchase, color-coding their spreadsheets, analyzing their spending by category and subcategory, creating beautiful charts and graphs. They can tell you exactly how much they spent on groceries versus dining out, how their utility bills changed month over month, what percentage of their income goes to transportation. They've got their spending tracked down to the dollar, and their net worth is still basically zero because tracking spending doesn't build wealth. Taking action based on that tracking builds wealth. Here's the test. Are you tracking your expenses and then actually changing your behavior based on what you find? Or are you just tracking for the sake of tracking, making mental notes that you spend too much on food or subscriptions or whatever, and then doing nothing about it? Because if you're in that second category, you're not building wealth. You're just creating really detailed documentation of how you're staying broke. It's like someone who weighs themselves every single day, tracks every fluctuation, makes charts of their weight over time, but never actually changes their diet or exercise habits. The scale isn't the solution. It's just a measurement tool. The same is true for expense tracking. It's only valuable if it leads to actual changes in your spending behavior that free up money to invest. Otherwise, it's just busy work that makes you feel like you're doing something without actually doing anything. Here's another fake progress activity that I see constantly: optimizing things that don't matter. People will spend hours researching which high-yield savings account has the best interest rate, moving their emergency fund from a bank paying 4.2% to one paying 4.4% to save an extra $20 a year on a $10,000 balance. Or they'll spend days figuring out the optimal credit card strategy to maximize cashback rewards, doing complex calculations to determine whether they should use Card A for groceries, and Card B for gas, and Card C for everything else to squeeze out an extra $50 a year in rewards. Or they'll obsess over their expense ratios on index funds, moving from one that charges 0.04% to one that charges 0.03% to save $10 a year on a $100,000 portfolio. Look, I'm all for optimization. Getting the best deal and minimizing costs is smart. But there's a point where optimization becomes procrastination. When you're spending hours to save dollars, you're not building wealth. You're avoiding the hard work of actually building wealth. Real wealth building is uncomfortable. It means earning more money, which might require asking for a raise or switching jobs or starting a side business. It means cutting significant expenses from your budget, which requires changing your lifestyle and saying no to things you want. It means investing consistently, even when the market is scary, which requires overcoming fear and trusting the process. All of that is hard. All of that requires real change and emotional work. Optimizing your savings account interest rate is easy. It's comfortable. It feels productive. And it makes almost no difference to your actual wealth. If you're spending more time optimizing minor details than you are on the big rocks of wealth building, which are earning more, spending less, and investing the difference, you're not building wealth. You're just looking busy. Then there's the whole category of what I call financial theater, which is doing things that look like wealth building, but are actually just consumption disguised as investment. The most common version of this is buying courses and books about money. Don't get me wrong, education has value. Learning about personal finance is important, but I've met people who have spent thousands of dollars on investing courses, real estate education programs, business and entrepreneurship training, and they haven't actually invested a single dollar in the stock market, bought a single property, or started a single business. They're professional students of wealth building who never actually build any wealth. They read books about real estate investing, but never buy a property. They take courses on stock market investing, but never open a brokerage account. They buy programs about starting a business, but never launch anything. This happens because learning feels like progress. When you buy a course or read a book, you feel like you're moving forward. You're gaining knowledge, which must be valuable, right? But knowledge without action is worthless. You don't get points for knowing how to invest. You only build wealth by actually investing. You don't become a real estate investor by taking real estate courses. You become one by buying property. The course is supposed to be a tool to help you take action, not a substitute for taking action. If you've spent more money on financial education than you've actually invested in building wealth, you're not building wealth. You're just consuming content about wealth building while staying broke. Here's another fake progress trap: constantly changing strategies. People get really into one approach to wealth building. Maybe it's index fund investing, or real estate, or dividend stocks, or whatever. They research it, get excited about it, maybe even start implementing it. But then they read something or watch a video about a different strategy that sounds even better. So they abandon the first approach and switch to the new one. Then, a few months later, they discover another strategy that seems even more optimal. So they switch again. They're constantly jumping from one approach to another, always looking for the perfect strategy, and never sticking with anything long enough to actually see results. This is not building wealth. This is strategy hopping. And it's just another form of busy work that feels productive, but accomplishes nothing. Real wealth building is boring. You pick a reasonable strategy. Something simple, like investing in low-cost index funds consistently over decades. And then you just do it. Over and over. Month after month. Year after year. You don't need to constantly optimize or find better strategies. You need to stick with a good enough strategy for long enough to let compound interest do its thing. But sticking with something boring for decades doesn't feel exciting. It doesn't feel like you're doing anything special. So people convince themselves they need to keep learning and optimizing and switching strategies because that feels more active and engaged. But all that activity is preventing them from making real progress because they never commit to anything long enough to see results. Let me give you a concrete example of what I mean. Let's say you decide to start investing in index funds. You open a brokerage account, set up automatic monthly contributions of $500, and you invest in a total market index fund. That's it. That's the whole strategy. Now, if you stick with that for 30 years, you'll probably have around $600,000 to $700,000 depending on returns. But what a lot of people do is they start with index funds. Then 3 months later, they read about dividend investing and think maybe that's better. so they sell their index funds and buy dividend stocks. Then, 6 months later, they hear about real estate being a better investment, so they sell the dividend stocks and save for a down payment on a rental property. But then, they get scared about being a landlord, so they don't buy the property and instead put the money in a high-yield savings account while they figure out what to do next. Then, they discover cryptocurrency and think that's the future, so they move money into crypto. Each of these moves feels like progress, like they're actively managing their investments and making smart decisions. But in reality, they're just churning through strategies and never building any real wealth because they're not giving anything time to compound. Here's what's particularly insidious about all these fake progress activities. They satisfy your psychological need to feel like you're doing something without requiring you to do the hard things that actually build wealth. Tracking expenses feels productive and gives you a sense of control, but it doesn't require you to make hard choices about cutting spending. Optimizing minor details feels smart and engaged, but it doesn't require you to do the scary work of asking for a raise or changing careers. Buying courses and books feels like self-improvement, but it doesn't require you to take the risk of actually investing or starting a business. Switching strategies feels active and informed, but it doesn't require you to commit to something and stick with it through the uncomfortable parts. All of these activities let you feel like you're working on your finances while avoiding the actual work of building wealth. So how do you know if you're actually building wealth or just looking busy? Here's the simplest test. Is your net worth growing at a meaningful rate? Not your knowledge, not your sophistication, not how organized your spreadsheets are. Your actual net worth. Are you worth more this year than you were last year? By a significant amount? If you're making $80,000 a year and your net worth increased by $2,000, you're not building wealth. You're barely treading water. If your net worth increased by $15,000 or $20,000, now you're actually building wealth. The only metric that matters is whether the number is going up, and going up substantially relative to your income. Everything else is just noise. Here's another way to test yourself. What percentage of your income are you investing? Not saving, investing. Money sitting in a savings account is not building wealth. It's just sitting there, losing value to inflation. If you're making $80,000 and investing $400 a month, that's 6% of your gross income, or about 8% of your take-home. That's not nothing, but it's also not enough to build serious wealth. You're going to end up comfortable at best, probably working into your late 60s. If you're investing $1,000 to $1,500 a month, that's 15% to 22% of your gross income, and now you're actually building wealth at a pace that will lead to financial independence. The people who are serious about building wealth are typically investing 20% to 30% or more of their income. If you're not hitting at least 15%, you're not building wealth. You're just avoiding being completely broke. Here's a third test. How much time are you spending on low leverage activities versus high leverage activities? Low leverage activities are things like tracking every expense, optimizing credit card rewards, researching which savings account has the best rate, reorganizing your budget spreadsheet, reading books and taking courses without implementing anything. These activities might save or earn you a few $100s a year at best. High leverage activities are things like negotiating your salary, switching to a higher paying job, starting a side business, cutting a major expense from your budget, or setting up automatic investments. These activities can change your financial trajectory by thousands or tens of thousands of dollars per year. If you're spending more time on low leverage activities than high leverage ones, you're not building wealth. You're just staying busy while staying broke. Let me be really specific about what actual wealth building looks like so you can compare it to what you're doing. Real wealth building looks like this. You figure out how much you need to invest monthly to reach your financial goals. Let's say it's $1,000 a month. You look at your current income and expenses and realize you're only investing $200 a month. So you have a gap of $800 that you need to find. You cut through your expenses and identify $300 a month in spending you can eliminate without significantly impacting your life. Subscriptions you don't use, eating out less, downgrading your car, moving to a cheaper apartment, whatever. That gets you to $500 a month invested. You still need $500 more, so you focus on earning more. You ask for a raise, or you start a side hustle, or you switch jobs, or you pick up freelance work. You do whatever it takes to increase your income enough to invest that extra $500. Now, you're investing $1,000 a month. You set up automatic contributions, so it happens without you thinking about it. And then you leave it alone. You don't constantly check your balance. You don't switch strategies every few months. You just let it run on autopilot while you focus on continuing to earn more and keep your expenses reasonable. That's it. That's real wealth building. It's not complicated or sophisticated. It's not about having the perfect strategy or knowing all the advanced tactics. It's about the boring fundamentals of making money, not spending all of it, investing the difference, and repeating that process for decades. Everything else is just decoration. Compare that to what most people do, which looks like this. They read about investing and feel motivated to start. They spend a week researching the best brokerage account. They spend another week reading about different investment strategies. They finally open an account and invest $100 because they're not sure if they're doing it right. Then they check the account every day to see if they made any money yet. After a month, they've made $2, which doesn't feel like progress, so their motivation drops. They still haven't figured out how to invest more because they haven't addressed their spending or income. They get distracted by a new savings account offering a sign-up bonus, so they spend time opening that account and moving money around. They download a new budgeting app and spend hours setting it up. They take a free webinar about real estate investing and start thinking maybe they should do that instead. 3 months later, they still have $100 invested. They've spent dozens of hours on financial activities, and they feel frustrated that they're not making progress. They're busy. They're engaged. They're not building wealth. Here's what's hard for people to accept. Building wealth is actually pretty simple, but it's not easy. The activities are straightforward, but executing them consistently requires discipline and sacrifice that most people aren't willing to maintain. It's simple to say invest 20% of your income, but it's not easy to actually cut your spending or increase your income enough to make that happen. It's simple to say stick with your strategy for decades, but it's not easy to stay committed when the market crashes or when your friends are making money on some hot investment you're not in. It's simple to say focus on earning more, but it's not easy to have the uncomfortable conversations or take the risks required to significantly increase your income. So people avoid the simple but hard activities and replace them with complicated but easy activities that make them feel productive without actually building wealth. You know what the wealthy people I know don't do? They don't spend hours optimizing minor details. They don't constantly switch strategies. They don't read endless books about money without implementing anything. They don't track every penny they spend in elaborate spreadsheets. You know what they do? They earn a lot. They keep their lifestyle costs reasonable relative to their income. They invest consistently and aggressively, and they ignore most of the noise. They're not busy with their finances because there's nothing to be busy about. They set up systems that work. They automate everything they can, and then they focus their time and energy on earning more money, not on optimizing the money they already have. Their approach is boring. There's nothing clever or sophisticated about it. But it works, which is more than you can say for all the busy work that everyone else is doing. So here's what you need to do if you recognize yourself in any of this. Stop doing the things that make you feel productive and start doing the things that actually produce results. If you're spending hours tracking expenses but not changing your spending behavior, stop tracking and just cut your 3 biggest discretionary expenses by half. If you're researching investment strategies endlessly, pick one reasonable strategy like index fund investing and just start. Stop learning and start doing. If you're optimizing minor details, redirect that time toward increasing your income. One good salary negotiation will do more for your wealth than a lifetime of optimizing credit card rewards. If you're buying courses and books about wealth building, stop buying and start implementing what you already know. You don't need more information. You need more action. And here's the uncomfortable truth that nobody wants to hear. If your net worth isn't growing substantially year over year, you're not building wealth, regardless of how busy you are with financial activities. You can have the most organized budget spreadsheet in the world, but if you're not actually investing a significant percentage of your income, you're not building wealth. You can know everything there is to know about investing, but if you don't have any money invested, you're not building wealth. You can be incredibly active and engaged with your finances, but if the number isn't going up, none of that activity matters. Stop looking busy and start making progress. Stop confusing motion with movement. Stop doing things that feel like wealth building and start doing things that actually build wealth. Because at the end of the day, the only thing that matters is whether you're worth more this year than you were last year. Everything else is just fake progress.